Welcome back to another Stock Market Open Live. Today we got the jobs report. It's going to be a big deal. And we've got the roaring of the kitty as well, who's going to do a live stream. Was that like 9 a.m. or something like that, California time? So we'll see what the heck is going on in the world. But most importantly, now we will take a peek at the GMizzle. The GME down 16% in the pre-market. And folks, you just cannot make these lines up. You can't make the lines up at all. Yesterday in the Stocks and Psych group, we were talking about these lines as well. I said, hey, I have a feeling it's going to go down over here to 36, whatever this was. What's my line over here? I wrote it down yesterday. Anyway, 36.94, and it's like, boom, perfection. It's the lines are delicious. But take a peek at this in after hours yesterday. In after hours, you had a rally from a 43.30 where we finally broke above this 43.30 line. We rally up to 52.37. Pit stop at the Fibby Dibby. We come over here. We break the next Fibby Dibby. And then we break out for a blow off the top. We come back under the 63.92 line, reject. When we can't make it over, boom, it's straight down to the 52.37. You can't make these lines up. I mean, it's almost perfection. And then once we break the 52.37, where do we go? No, not the first next line, but all the way down over here to 36.82. Wow. Crazy, and now we're in the no man's land between these two lines here, so it's gonna be kind of remarkable. But this one's down 15% here in the pre-market. So yeah, as we like to say, the lines don't lie. Yeah, exactly. Oh, Brian M., why you gotta be so poopy doopy? Meet Kevin would be so much better if he cut out the baby talk. Oh, wah. Why's he gotta be like that? All right, so what we're going to do is we're going to prep now for the jobs report. We got a good old jobs report coming up. I don't expect that we're going to see something crazy in this jobs report yet. I think it's too soon. I do think that at some point this year we're going to see not only dramatic revisions to jobs reports, but also just quite frankly negative jobs reports. I don't know when, but I think usually what happens is when jobs cuts come, they basically they come quickly and all at once. And the problem with that is it's very difficult to see that in leading data, especially since consumer data is something that like consumptive data is something that is really a symptom of jobs. When people are confident in their jobs and they have a good job, they consume, they buy a new car, they go on a vacation, they get to live their lives and do whatever they want, go to dinners or whatever. When you don't have a good job, or you're not confident in your job, or you think you're, going to lose your job, guess what quickly stops? Consumption. It's all based on jobs. Now, the reality is, in my opinion, it's way too soon, in my opinion, to expect that the May jobs data is going to see some significant weakening. You're probably honestly going to have to wait until like August, September, October, something boring like that. Nobody wants to wait that long for some real data here. And the reality is, too, this data today is just like, frankly, kind of rigged, probably. At least that's what Bloomberg Intelligence thinks. Or the economists, rather. Bloomberg economists think we're probably, overstating how many jobs we have by a factor of 2 via these jobs reports. So something else to keep in mind. Anyway, so the number that we're looking for in this morning's jobs report, you ready for it? We're looking for a change in non-farm payrolls of 180,000. The private payrolls 165. Looking for an unemployment report at 3.9. A 4 handle would probably be bad for the market. There might be some depression. We'll see. And then average hourly earnings at 0.3. You want that to remain stable, if not on the lower side, but you do want it to be positive. Okay, here we go. And oh my god, I don't know, this is bullcrap. 272. It can't be true. But okay, 272. So huge beat in the jobs report. Yet the unemployment rate actually goes up to 4% with a 272 handle. What? Who writes this stuff? Average hourly earnings month over month actually go up to 0.4 from 0.3. Then you have labor force participation rate goes down. So 34.3%, sorry, 62.5%, down from the survey of 62.7. Well, as suspected, way too early to see any kind of real weakening in the jobs numbers. But then also keep in mind that the numbers are probably overstating employment by a factor of 2. But this is the sort of data that is going to take some rate hike bets potentially off the table this year, or at least reduce it until we start getting some weakening. Remember, the Federal Reserve has told us they can cut rates extremely rapidly. They don't need to cut rates sooner than they need to, in their opinion. That's their opinion, right? So as a result of this labor report here, you just had the 10-year drive up about 12 basis points. This is quite an unusual report in the face of some of the uncertainties that we're seeing starting to rise around the how much we can question this data. Let's listen to Rick.
Last month, and that was the best going back to November of last year, but this number at 62.5 equals February. To find a lower number, you have to go all the way back to January of last year. And finally, what we call U6, or the underemployment rate, versus U3, which is the one we talk about, which just popped to 4%. This one remained at 7.4%, where it was last month. But that is the highest level since November of 21. We could see interest rates went up, and for good reason. Stronger jobs, definitely stronger on the hours. The unemployment rate, though, moving higher, I would have thought potentially would have been strong, but it doesn't seem to be able to push back the tidal wave of what wages seem to be doing in job creation. I really want to quickly point out one thing here. When you look at interest rates and you read the papers today or your websites, they talk about the ECB, after easing, is expanding the difference between our yields. That's not true. Right now, before this number, tens minus boons was hovering just above 170, a 5-month low, meaning the closest they'd been.
Here goes Rick.
Basically for all of 2024. Back to the panel and you, Becky.
But we just moved 11 basis points on the 10-year. We're at 440 now.
Yeah.
Yes, we are. 440 right now. Just to put a face on this, we're still down 10 basis points on the week. We closed last week at 450.
Yep.
Wow. Okay.
All right. Keep in mind that GameStop looks like they might be. Yeah, here we go. GameStop, our common stock listed in the New York Stock Exchange under symbol GME on June 6th. Last reported share price was $46.55 per share. Common stock experienced extreme volatility. During such period, we did not experience material changes in our financial conditions, blah, blah, blah. Okay, here we go. Previously opened into an agreement to sell our shares. It looks like they just issued another 75 million shares. I think that's what's going on. At the money, or at the market, basically. That's really interesting. Okay, so that's why we're seeing the move in GME. It's the offering again. So let me see this. 75 million shares. What's the, if we go 75 million times 46, what it closed for yesterday, that would be, that'd be up to $3.5 billion. $3.5 billion. Oh man. I have to say, this is like if you ever run a company that has public stock, I pray you get to turn into a meme stock. Like, it's so cool. It's like, oh, our stock is momentuming up. Let's raise $3.5 billion overnight. That's crazy. Well, good for them. That'll help them eliminate some of their debt, some of their deadly doodlas. Oh, I'm gonna get in trouble from the person who doesn't like weenies. Anyway, bizarre employment report here, mostly because we just anticipate that the numbers would at least stabilize around 175 for a bit more first, rather than this 272 handle. This is kind of remarkable, honestly, and I don't believe it, but even if, quite frankly, it's overstated by a factor of 2, it's actually still good, and that'd be like 130 to 140K. Weird. Okay. This is why I wonder, like, who writes this stuff? So let's go take a look at the actual employment report. But wow, that's a number. Total non-farm payroll increased by 272 in May. Who's gonna believe this? Okay, the unemployment rate changed. It was unchanged, roughly unchanged at 4%. I mean, it was 3. Hold on. Last month it was 3.9. So yeah, it moved up to the 4 handle. Oh well. Employment continued to trend up in several industries, led by healthcare, government, leisure, hospitality, professional, scientific, and technical services. Gosh, this is just not the weakening that you're seeing in that ADP report. The ADP report was signaling that there's weakening going on. Let's see what difference there is between household and establishment as well. We'll do that in just a moment. Among the major worker group, the unemployment rates for men were 3.8, adult women 3.4, teenagers 12.3, whites 3.5, blacks 6.1, Asian 3.1, Hispanics 5%. All these little or no change in May. Long-term unemployed accounted for 20.7 of all employed people. Labor force participation rate was little changed. It did go down 0.2, it seemed like. The number of people employed part-time for economic reason changed little. Not in the labor force, changed little. They're saying everything changed little, but okay. In May, employment continued to trend up in several industries, led by healthcare, government, leisure, hospitality, professional services, scientific and technical. Healthcare was 68,000 jobs. Wow. Government employment, 43,000. Leisure, hospitality, 42. And did we lose jobs anywhere? Let's see here. Retail trade, 13K. Others showed little to no change. Nope. They're not really saying we lost jobs anywhere. Okay. This is very interesting. Let's go household data. So, I'm not going to save this one as a PDF. I'm just going to go in here. Household data. This one's hard to read. You have to find the civilian labor force. You see the civilian labor force on the right over here fell 250 mil. But then the employed position. Oh, okay, yeah. The households report is down 408,000. Are you kidding me? What? Oh, come on, man. This is some Fugazi. So, let's write this down to try to make some sense of this. So you're telling me the establishment report showed, what was it, 272? 272,000 job gains, but the households survey showed a loss of 408,000. But we're going to cheer the headline 272. I don't buy it. Yeah, sorry. I'm being jaded this morning. Just, there's my little tweet. So you're telling me the establishment report showed 272,000 job gains, but the household survey showed a loss of 408,000. A little odd. A little odd. I mean, I didn't get that wrong, did I? Somebody help me fact check me really quick. So I go to this little green bar, see where it says employed, right? And then up here it says household data. Hey, sometimes I screw up. You know, I realize I'm not perfect. I make mistakes all the time. I'm like the king of mistakes. Negative 408. And those are obviously in thousands. Change from April 2024. So it's literally a 1 month change here. There it is. Somebody might be making a mistake. I don't think it's me on this one. Look at GME try to bounce perfectly on my little line there. Yeah, so the establishment survey can double count. This is true. So the household survey calls individual workers at their home, imagine household survey, and suggests, hey, do you have a job? And let's say you have 3 jobs. Well, then you're going to answer and say, yes, I have a job. Got it, 1 job. Now they call 3 different companies, and you work at all 3 of those companies. They're like, how many employees do you have? Well, technically, in that case, you'll get double or triple counted. So, yes, that is a contributor to the difference. That's why they try to do the 2 surveys and balance them. But the magnitude of that spread is so huge, I can't even throw that on double or triple counting. I mean, you're off by, what's the delta? This is almost a $680,000 gap. Or sorry, dollar gap. 680,000 difference. Oh, somebody here in the chat says it's 408, not 408K. So they present these numbers in thousands. Here's where it says that. Numbers in thousands. Yeah, they do that just to simplify the charts. So you add a lot of zeros and miscellaneous numbers. It's a mess. Are illegals crossing the border not affecting job status? Oh yeah. No, I am almost 100% certain they show up in the BLS data, maybe less so in the private labor reports like the ADP report. Patrick here says 22% dilution, so I put it in my calculator and the stock should go down 30%. Talking about GME, eh? Oh. Somebody says Nick T tweeted. All right, Nick T. Yeah, Nick T didn't mention the magnitude of difference, though. He just mentioned the 272 number and then that there was a drop. What's going on over here?
The people to fill the jobs, right? If the unemployment rate goes up, that is what the household survey is actually good for. It's the number of bodies available for the jobs. It's for calculating the unemployment rate. Then we seem to have the people to fill it, so there's not much of an inflationary impulse from it.
Although the average hourly earnings, 0.4% month over month, was better than the 0.3% that was anticipated. If you're looking at it year over year, I think it was 0.2% higher at 4.1%. Is that a concern just on the inflationary side of things?
No, I don't think it's a concern from the standpoint of it's not the cause.
No, Walter, never. That's exactly how we got 7 kids.
Somehow increasing wages is going to cause prices to rise. It's exactly the opposite. It's inflation which causes both wages and prices to rise. And unfortunately, what we're seeing from the Fed is more inflationary pressure. They are continuing to allow bank reserves to rise. That's actually been the case since the very beginning of January 2023. And as that continues to trend upward, we continue to build the money supply. And so that's a big reason why we continue to have so many price increases and widespread price increases throughout the economy. It's not just the headline figures which are going up. You can take out outliers looking at things like median and trimmed mean, CPI as well as PCE, and you find the exact same thing, widespread price increases.
Rick, what do the boys and girls in Chicago want to do here? Do they want the Fed to hike, to hold hold in place here? What's the shouting going on there in Chicago?
You know, most of the traders I talk to have a couple of things in common. They don't trust the jobs numbers for a variety of reasons. They think the birth-death model, which is adding too many jobs, has seasonal adjustment flaws. They believe that many of the jobs created are part-time. But the biggest anecdotal piece of evidence on the labor market metrics not being correct are the job openings. Anecdotally, headhunters, I have a couple relatives that have been out looking for jobs. And what I hear over the last 9 or 10 months is many of those jobs that are advertised as open positions aren't really open positions. So I think there's a lot of variables here. And one other thing that we probably ought to point out, and that is when you consider wages, and I like what EJ said, but there is a feedback loop between wages and inflation. You know, we're talking about, airline industry, 18% potential rise in wages. That all fuels each other. But consider that pre-COVID, the 4.1% year-over-year number was 3.5 in March of 20, 3% in Feb of 20, and it was 3.1% in Jan of 20. So the wages are probably the real accurate picture here. I think much of the other data I really continue to question, and I think that was...
Yeah, sorry, it's my fault these jobs numbers came in hot. I entered all my children into the labor force.
Changed on the week, near 4.87, where the 10s, of course, are about 9 basis points still underwater on the week. 430 was considered good support. It went a bit below that. I think interest rates are going to be much firmer. The street's the wrong way right now on the long maturities.
Fed futures zero yet, Steve.
Say again?
Fed futures zero.
For the year.
Not zero. I'll give you the exact number here before we go to break here. 8.9% I'm looking at for July.
It was
so that's
20,
not
wasn't
on.
it?
54, 55%.
Kevin, can you enter me the labor force? Yeah, actually, we can. We added a... we've already started doing some... there are a lot more to go through, so sorry if we've been slow at getting back to you, but we've already started doing some interviews of people who have sent us interest in being an intern. But it's not, you don't only have to be an intern. Like if you're in the finance industry, if you're in the accounting industry, you don't want to be an intern, you want like a job, that's probably going to be more competitive, but you're more than welcome to send like your resume and a 60-second pitch video to us at jobs@mekevin.com. So, we're going to need a lot more people come, I mean, certainly by October, it's gonna be a little crazy. So we're getting prepped now, and of course we'd be willing to hire before that even for the right matches. But yeah, it's things are about to get a little crazy, and it's actually really interesting because we joke in the office that it's like we're in the calm before the storm right now. So. It's really entertaining, but yeah, it's kind of fun. So let's see how some of these stonks are reacting. Anyway, yeah, that was jobs@mekevin.com if you're looking for a job. It would be, what do we need? Programming, so software engineering, accounting, bookkeeping, and then other role, finance, and then other role, or like like if you're a Series 27 or whatever, and then maybe like some like legal would be interesting as well. If you're looking for like a sort of a junior, like to work under an attorney, that would be interesting. Outside of those, it'd probably all be intern style, and they're all in person. Sorry. No remote, not yet. Maybe one day. Maybe one day. All right. So, what a jobs report. Let me get a quick little rundown here of the jobs report. Let's see here. Okay, so BlackRock suggests that the Fed giving the green light for easing of market conditions is increasing people's wealth through the stock market and therefore leading to more hiring. Interesting. So BlackRock suggests the beat on jobs is due to the Fed forecasting rate cuts, leading wealth to rise. That is interesting. Once again, a tale of two surveys. Yep, we talked about that. Okay, so look at the difference between the two reports. So, well, maybe don't look at it. You just listen when we say it. But so we know that between the two surveys, the establishment report came up 272,000 jobs, and the households report, that one came in at negative 408,000. But understand, over the last year, which is interesting, household survey shows just 0.2% job gains, whereas the establishment survey over the last year shows, I think it's 1.8. Wait, might not be that high. No, it is 1.8 to 0.2. So that's a pretty big gap between the two there. Why potentially? Immigration, actually. Now that makes a lot of sense. Oh, wow. That's really interesting. I didn't think about that, but that could actually be because of immigration itself. Think about it. If you're undocumented, you're going to get counted, likely, in some of these payrolls reports, but you're not going to get counted, because you ain't answering the phone to the Fed boys. Oh, that's really interesting. That makes too much logical sense. It can't be true. Wow. Yeah. Greater likelihood employees are reported as working by the establishment report, where businesses are surveyed on the number of employees they have, versus the household survey, where individuals are contacted. That is interesting. Okay, this is like such a different report though from ADP. So much hotter than ADP, which ADP might not count as many undocumented. That's really interesting. That's just what some people say, so I'm gonna put a little halo emoji on that. Okay, that's fascinating. Easy takeaway here is Fed won't be cutting in July. When was the Fed gonna cut in July anyway? Come on. That'd have to be a problem. So if I look at rate cuts, okay, the odds of a rate cut just fell. So we're now looking at odds of cut just 1.62%. Sorry, no, that's the wrong way to say that. Number of cuts priced in for December, 1.62 cuts. And that's for December. And then if I go to November, we're at that's probably when we'll get our first one. So that's going to be basically 0.89. 0.89 November. Okay. And then September, you're only at 0.59. Okay. Fascinating. All right. And then the 10-year, I think, was up like 12 bips. Yeah, the Roaring Kitty Live is 9 a.m. Pacific, 12 p.m. Wall Street time. I hear some people say that. That's called East Coast time. Okay, 10-year yields. So on the 10-year, we're now sitting at 13.7%. Boom! Up 13.7 BPs. BPs? Blueprints? Force wipe? What? Who would say such things? All right. As a result, hey Kevin, did you get Tesla Mescal? Where'd you send it? I haven't checked the mail, but sometimes the team checks the mail way more than I do, so it's entirely possible. If you sent it to telephone, I will make sure that gets checked today. Thank you. That sounds really interesting too. That's actually kind of exciting. So, what happened yesterday? Yeah, you know, I talked about that in the course member live stream. We were still able to do the course member live stream on time. But oh no, I didn't order any. Is that what you're asking me? Oh, okay. I thought you sent me something. I'm like, huh? No, either way, no, thank you. I didn't. I've kind of stopped ordering the miscellaneous things from Tesla's website. So anyway, yeah, sorry. Yesterday I missed the morning stream. I feel really bad about that. Basically, I was trying to move my schedule up to waking up at like 2 or 3 a.m. Remember that day I did like 5 videos this week? I got them all out because I was up at 2 a.m. And I'm like, this is great, so productive. And I just, I was able to do that like 2 days in a row, and then I just slept right through every alarm I had. And I'm like, okay. Yeah, it was like 7:30 and Max and Jack are coming in to say hi to everybody on the live stream, and they're like, oh no, Dad's not live, he's passed out. Oopsies. Made a little oopsies. Doesn't make sense. If the household survey counted illegals, but the official jobs report didn't, then it would be that the household survey would be hotter than... No, but I said the opposite, right? So the household is calling houses. The establishment, and they're both an official government report, the establishment is calling businesses. Businesses are asked in the survey, how many employees do you have? They don't ask how many of them are legal. They don't ask how many of them have social security numbers. Yeah. So, is he going live on his YouTube? I believe so. Oh, it's on their website. Oh, that's what you're asking me. Oh, okay. No, I probably won't. Tesla Mescal. Oh yeah, there it is. No, I don't know. No, I'm not gonna do it. It's I wonder how much they're selling it for. It's too much. $450. See, this was fun when Tesla was like, is that rubber on top? Oh, it's like, it's the same bottle, but it's plated in like a satin film. That's kind of cool. Same design. Yeah, no, I don't want it. Yeah, I don't know. Now I feel like, hey, let's have some Tesla tequila or mezcal or whatever. And like, you have a 50% chance of somebody punching you in the face. You know, like 3 years ago, everyone's like, oh yeah, Tesla tequila. Now it's like, 50% of people. Right, Doc. A lot of people feel that way. And I hate that, because like so much of me still looks at Elon as like, so much about him is brilliant. But then on the flip side, I'm like, but so much has been so stupid. So, you know, there's a balancing act. But anyway, Doc here says, I'm so done with Tesla. Elon left a bad taste in my mouth. Happy with Nas. Yeah, I think by Nas you're referring to the triple Qs, or some equivalent of that. Basically the NASDAQ 100. Remember, NASDAQ's also a stock exchange. That leads to a lot of confusion. If you are investing, by the way, in QQQ, free tip for everybody, I highly recommend, if you are long investing in QQQ, consider switching to QQQM. Okay? It's the same company. It's Invesco, the NASDAQ 100 ETF. QQQ has higher fees because that's the one they advertise and the one that's popular. QQQM is the same exact thing. It has lower volume, but it's the same exact thing, same price movement, everything, and it has lower fees. So that's something that's yeah. There you go. That's a great distillation. QQQ equals trading vehicle. QQQM equals investment. I like that. So, I don't know, the robotics work coming out of Tesla is in such an early phase, I don't think people have really appreciated it yet. Oh, no, it won't get appreciated by the stock market until you could actually create, dollar hollers. That's the way it is. No basic Earth. The programming from the media is so strong. That's why so many are mindlessly against Elon. No, you know what? Let me put it this way. Okay, so if somebody asked me, like, hey, what pissed you off about Elon? These are either things that I've heard from Elon directly in earnings calls, or have been stated in prior posts from him. So first of all, I think the politicization of a CEO who's trying to drive a green energy transition is just abjectly stupid. It makes no logical sense. It's literally waking up and shooting himself in the foot on a daily basis. And it's not like one time. It's like for years. That's a problem. So number one. Number two, when we hear things like, oh, the 4680 cells, these are going to be the greatest thing ever. It's so exciting. We're going all in on these. Structural batteries, yay. And then, yeah, we're just going to use them in the Cybertruck, and they're, batteries in China are getting cheap, so we're just mostly going to use those. These are straight out of Elon, right? This is not mainstream media. It's literally all out of Elon's mouth. Or how about, here's another one. Dojo, could be the next AWS. We're going all in on this stack. And then, 2 years later, it's, they're mostly just a hedge. So, mind you, those are directly quotes from Elon Musk himself. So you can't say that somebody's manipulated by the mainstream media if the citations they're using are from the horse's mouth directly. So that those are things that just like they add frustration to me as an investor, and they make me go, wait, so what? Like, how much should we really believe in the other, moonshots? So, yeah, I don't know. So those are just things that I think of. But anyway, right, good, okay, very well. So next, see, like, yeah, I could get past like the new Roadster not being out yet. I realize that being relatively niche. I could also, I guess I have trouble getting past the firing of like the supercharger team. I know a lot of those folks have been hired back. That drives me nuts. It just feels rash. So here's one. He bought Twitter by dumping shares on his investor, then asking for those shares back. I mean, I get why he's asking for the shares back because of the promise of 2018, which that makes logical sense, right? But yeah, and I mean, there's nothing to say that you have to promise that you won't sell company shares and go buy another startup, right? But it does a little bit feel like Tesla lost its CEO during one of the most important times because of that, and it amplified the politicization of him as a person. So, yeah. So I personally, I don't fault him for selling the shares. I fault more the lack of Elon that Tesla potentially ended up getting then. Elon is making rash decisions because he has depression issues. His brain is bouncing everywhere. He does say that he's regularly depressed. I don't know. It's hard to speculate on somebody else's lot, but. Like I say, I feel like, and I've said this, frankly, I've said this for years. I think what Elon needs is like a really good friend that could also give him real advice. But the problem is, I don't think that it's going to be easy for Elon to find a real friend. I think anybody who's around him is just going to try to cheer that they're with Elon, or look at me, Elon, this or whatever. It would be very difficult for him to have a true friend, I think. So, and that makes me feel bad for him. Oh well. So, all right, very well. Okay, so it looks like we're at a little less than 1 page of green. I suspect that we're going to see more of this throughout the day. Usually, when you have less than a page of green, you're going to get more balance. You're going to get a lot more green over time here. We have about 25 minutes until the market opens up here. And if you take a look here at BT Sizzle, you can see we had this incredible drop here at the release of the payrolls report, a plummet really in the release of the after the payrolls report, and we came right back into this trading range right here. So the more powerful of these two lines is the 71 1 line. So I'm going to go ahead and make that one a blue line. It's getting promoted. And a weaker one that I've just seen on a trading range yesterday is 71 246. So another one to sort of pay attention to here. What else we got? End phase down 2.5% here at the open. Let's go to average for a moment. Oh yeah, a little bit of a droppy doodle. Bouncing on the 128 line. Okay, Tesla wants to bounce on 175.60. Okay. Amazon 22 bips. GameStop's trying to hold on to 17% down. AMC 6. Microsoft 12 bips. Celsius 1. TMF's moving down. That makes sense after the rise in yields this morning. SunPower down 3. I want to see the big movers. How's DJT, by the way? We'll look at that in just a sec. 23 and Meta. Nominal movers to the upside. Very nominal to the upside. AMC, Microvision, GME, SunPower. These are all to the downside. SoFi, Palantir, Greenwave. Where's Nvidia and DJT? DJ Tizzle. Down to 45.40. And Nvidia. MJ Matrix. I think everybody's kind of got to make their own personal decision. I mean, I think it's okay to vote yes and re-ratify the comp plan. I think people were pretty well informed by the decision that was made in 2018. The problem today is you have probably a very different shareholder base than you had in 2018. And so people who voted in 2018 aren't the only voting shareholders today. So today you're going to have a lot of new voting shareholders who may have bought Tesla at the peak and wrote it down for the last 3 years. And I think there's a high likelihood that those, the new group of Tesla investors, unfortunately for Elon, are going to vote no on his pay package. I think that I was a shareholder during the 2018 situation. I've been a shareholder since like I think it was the end of 2017. But anyway, the what's remarkable is there's a real chance that this could just fail by, you know, some large margin just because of the sort of spite vote. But it also depends on how people think the stock will move. See, if people think the stock will move up if he doesn't get his stock comp plan because it's anti-dilutive, then they'll vote no. If they think the stock will go up if he gets his stock comp plan because otherwise he might, you know, be less inclined to help Tesla long term, then well, then they'll vote that way. So, data analyst, maybe tell us what you got. I don't even know if we need a data analyst. Let's see here. Kevin, what do you think about 15 call option on DJT expiring 10/15/20 a week before the inauguration? Basically asking me what I think about loading the boat on puts that long out. Well, I think the volatility crush is going to be one of the most glorious and costly things that you could possibly have. And I don't mean like a crush like that girl you like from middle school that rejected you. I more mean like the asking, stating that for a friend. I'm more talking about the implied volatility of the stock is going to go to like 0 after the election. Let's see here. I mean, it's already declining substantially. And it's been on a downtrend since January of 2024, and I suspect it will continue to be all the way until then. So it's going to be expensive. I mean, I get the desire. The odds are it's going to go down substantially, especially if he doesn't win the election. All right. So, do you think GME will surge at open? It's always tough to know. I think the first 15 minutes are almost a gamble. Remind you. I'm sorry. If Elon doesn't get the vote and starts coasting without actually trying to work in his best interest at Tesla, isn't that a legal issue since the company is since he's expected to work for investors? Well, yeah, but honestly, I don't think his effort will change too much no matter which direction it goes, because there's like I don't know. I'm not convinced there'll be much of a difference. Working in advertising as a media planner buyer. Does Househack plan to advertise? Probably years down the road, but not right now. Yeah. And voting no would risk losing and demotivating a superstar, says DD Mods. Yeah, it's possible. It's hard to know. Thoughts on ARK buying Amazon yesterday? Well, I went bullish on Amazon maybe about 6 weeks ago after they started going positive on their retail. So, yeah, I mean, for what it's worth, that sort of aligns with my thesis. So it's hard for me to say what I think about that when that's kind of what I think too. There was an interview on CNBC where a large shareholder said the shares have already been allocated for, so why would that be dilutive? Well, because it would be undilutive if it doesn't go through. If it doesn't go through and it undilutes, then it's kind of like you're getting a stock buyback. Right? So, that's why. All right. So, the Qs. Oh, look at the bounce on the Qs. The all-time high number is what they bounced at. Right here. So, 460.58. ARK buying more Amazon makes me more bearish. Oh, just kidding, he says. Kathy's a good person. Okay, so let's see here. What's oil doing? How did Brent jump again? We're almost back at $80 on Brent. I had a nice little bounce there on the 4th. Yeah, the 4th and the 5th. And then we've got all indices down. Dow's down 33, 41 on S&P, 38 on NAS for BIPs. All right. Goals post non-farm payroll drop shows it may heed to macro backdrop again. Gold having a bad day. Yields climb. Markets push. First rate cut expectations to December for fully pricing it in. Yeah, from November. U.S. payrolls estimates imply bias for higher yields on the day. Yeah. Today's jobs data offers a low bar surprise. Okay. Yield curve inversion. Longest running saga in modern history. I thought it's been inverted longer than that previously. Now into 19 months. Oh, in modern history. Oh, okay. Well, modern implies post-World War. So I think the Depression was longer. Ugh. That's interesting. How did things go modern right after you start nuking people? Okay. Skews to stronger labor market thought, which is a higher for longer bias from the Fed. Blah, blah, blah. Some rules rising a bit. That's the recession indicator. Fine. Boring, boring, boring. All right. It's all boring. It's all boring. Oh, boy. Here we go.
Because you had this massive amount of money that came into the private sector from fiscal. And so you actually just get a recirculating of income when you keep the rate this high, but it really hurts lower income. So point being, to hike rates makes no intuitive sense. To actually start to bring it down to a level that's merely restrictive, we think makes sense. So do you very slowly get that rate down to a level that's restrictive? Listen, price stability is a Fed's mandate. Your 2.8 on core PCE, probably staying around there, maybe a little bit lower. But what you're starting to see very slowly, and you got to marry this to the JOLTS report, which I think is more indicative of the future. Some of these areas, job openings, we had a peak of the JOLTS report job openings of over 12 million jobs, down to 8, almost exactly 8. Things like, it's interesting today, you look at leisure, and you just are seeing the bounce there. But if you look at the JOLTS report, job openings from the peak have come way, in accommodations, restaurants, retailing has come way down. So anyway, I think you got to balance it. I think you'll see the data from here in jobs start to come off a bit. But listen, the Fed's got to see it. And so you sit on your hands a little bit, get some more data. I think that's where we are.
I don't know, Rick, you think about what we heard in the JOLTS data, what we saw from ADP, and then NFP today, kind of felt like we were talking about different countries. But in any case, I'm glad you brought us to your comments from a month ago that basically it's a cut now, not a hike, that's needed to tame inflation. And looking through your comments, it seemed like you were really talking about the wealth effect here. You think about the fact that when you look at fixed income investments, you're earning a yield here, and probably consumers and savers feel a little bit wealthier than they did in years past.
Yeah, I think people underestimate there's been a massive demographic shift. The biggest spending cohort in the economy today is people 65 and above. Think of what's happening. Those are your savers. Those are the functional creditors of the economy. And it's actually interesting when you look at the savings rate. Savings rate stays low. Why does it stay low? Because they're still getting income pumped into their coffers. So what happens is they recirculate that money. Why do you see things like entertainment, healthcare, insurance, recreation, restaurants? That inflation level stays high because you're getting this dividend into their savings. So the two things that have happened: one, massive shift from the public sector to the private sector in terms of them becoming net savers, and then obviously this aging cohort that's been incredible. One last thing: when the Fed kept rates really low for a long time, companies termed their debt out. Individuals, even with the mortgage rate. Why the mortgage rate doesn't really, affect us. You don't see much in the way of housing starts, so people locked in their mortgages. So what's happened is debt was termed out, So the interest effect is not that significant. And obviously you have those other two shifts. So it's a very different. People say traditionally you got to hike rates to bring down inflation. The data and the environmental ecosystem is quite different than anything we've ever seen before, where you actually cut more income into the system when you put this kind of interest rate into the system today.
And I want to get to how investors should be thinking about that. But before we move on, I want to talk about the wealth effect a little bit more. So what you're describing when it comes to fixed income investments, money market funds, a very powerful force on the economy. Do you think that it is more dramatic when it comes to the wealth effect coming from fixed income rather than the wealth effect that comes from the stock market?
Both are hugely important. Both are hugely important. So you get an increase in your net worth from obviously the wealth effect that takes place, but also the income coming in. It's actually good what you bring out. It's a combination of the two that are creating that phenomena. And listen, by the way, there's still, like you say, a huge amount of money sitting out there, money market funds, bank deposits, that is getting that income effect. So it's the two of them combined that are creating this influence, which is actually truly extraordinary. Here's the dichotomy in the economy, the paradox that I think is a problem. The people that are borrowing, low income, small business, local banks, get pressured by the excessively high interest rate. And those are the borrowers. You're seeing this in credit card charge-offs, delinquencies, auto loan delinquencies. Point that I would make is you need to, over time, get that rate down to a restrictive level, not overly restrictive, because you're pressuring a good part of the economy, and I would argue unduly, given what is that high rate today.
And well, let's talk about where the neutral rate could be, where the Fed eventually settles up, because the bond market currently pricing that in around 4%. You have the Fed probably somewhere between 2 to 3%. What's the Rick Reeder view?
So I think when the Fed starts moving, the terminal rate's coming up. So think about what happens. And by the way, the Fed can execute this by not creating a financial stability, easing of financial conditions of significance. I think what happens is you bring that short-term funds rate down, you keep the terminal rate a bit higher, and you ultimately, to me, it doesn't take much to get the funds rate down to 4.5. But then then it's questionable you're going much lower than that. We're going to be in a higher inflation environment for a period of time. So point being, I think the dynamic is, gosh, should we go to 4.5? I think so. But are you going to go further than that? Certainly in the foreseeable future, maybe not. So that's where I think, that's.
Yeah, right. Absent like some form of really like big jobs movement to the negative side, it is going to be hard to get rates down rapidly. It's just going to take a lot of time. Remember how slowly inflation moved down in the 90s. It took 9 years to get inflation from on that path of down. It takes a while.
In terms of credit quality, in terms of emerging market debt, et cetera, that's pretty attractive for people today.
Well, Rick, let's go right there. Of course, your ETF, the ticker is BINC, of course, BINC there. And it's interesting, you take a look at your allocations, and you're pretty much more in high yield than anything else. That's about 40% of your portfolio. And I think that's pretty interesting because then you take a look at the duration, you're pretty short. It seems like credit risk is where you're more comfortable right now.
By the way, there's high yield and there's high yield. We like single B U.S. high yield. We like double B European high yield. By the way, you don't have to take the risk in triple C. I don't think we own any. I'm certain we don't own any triple C high yield. Like, why take the risk? You get plenty of yield from staying in credit quality. By the way, I would argue today's high yield, a double B high yield company, because they term their debt out, there's no maturity wall, is pretty darn close to an investment grade credit. So the point being, stay higher in high yield. Use some investment grade credit, which we are today. And yes, Katie, I think I've been doing this a long time in credit. It's as good as I've ever seen credit quality because they termed their debt out when rates were at zero. And so they're sitting on very little maturity wall other than parts of the lev loan market. So anyway, I like being in credit. I also like securitized assets. Things like AAA CLOs, because they're floating rate, because you actually get enough spread, you can create mid-sixes type of yield. And by the way, being a AAA asset.
All right. Let's pull off this for a moment. He's an interesting guy, but we've got some sticks to look at. You can see after the jobs reports here, we did get a drop of Nvidia down to about 1177. It is now back up to 1191. You've got BTC that's recovered, 71.2. It looks like it's going to try to ride my line right here, 71.246. Q's down about 20 bips, Tesla down 80, Enphase. You know, what I'd like is some more movement in the market. I have a challenging time trading in a sideways market. So I like movement, either up or down, doesn't matter. Like the momentum movement that we had in May was beautiful. That was a great, really, really, really profitable month. So I love that. So I want to see it. Give me some life, some action. I don't want boring party pooper sideways, nothing going on. We need entertainment. We need fun. Yeah. Oh, hey, look, we got a page of green. Barely. By like one, we got a page of green. Okay. The only thing that's really moving right now is Faraday Futures. You know, it seems to move off this 50-cent level a lot. I don't know if that's because options are priced over there. Yeah, it doesn't ever really make it back down to my 44 level. No, it just seems to ride above 50 cents, frankly. That's simple. Yeah, I was trying to find the divergence between full-time and part-time. I was having some trouble finding that. So, I actually have that chart up right here because I was looking at it. So I can't find where it says full-time. So, non-agricultural industries. I mean, I guess I could subtract from here agriculture and related, class of worker, self-employed, stable, wage and salary worker, this is like down 50K. And then non-agricultural, you could go in here and you could say, okay, minus 400K here. I believe that's how you have to do it. So then you'd go it's about minus 470,000 in full-time workers. And then part-time workers are roughly, or also down just a little bit. Part-time for non-economic reasons. Here, part-time over here did rise. So you're probably up like 200K on part-time and down 400 on full-time if I'm reading this right. But I was looking at that. Did Zero Hedge make a statement on it? Let me see if they actually did the math. I'm a big fan of looking at the numbers. Let's see here. Yeah, birth-death model. I see comments on that. Keep in mind the birth-death model is has to do with businesses, not people. Yeah, I don't actually see that commentary, but I'll take a peek at it. 50 minutes ago? Oh, I just paper-handed my Twitter timeline at 47 minutes ago. That's funny. I'm probably like one scroll away. Yep. Yep. Okay, yeah, that aligns with my yeah, that's accurate based on what I'm seeing here. See, look at this. Full-time negative 625K, part-time plus 286. Again, I believe if I just go in here, I could take that's 20 25 off, and here I'm gonna take, let's see, let's add this together, 25 plus, what do I got here? Oh my lord. Okay, 159 161 minus 158 919 plus 25. Yeah, I got 267 right there, plus probably some little adjustments over here in self-employed. And then I've got 300K here. I've got a decline here. A decline here. Oh, there's a 400K increase right here. Wow. Well, this is the all industries section right here. Yeah, there's a 400K difference right here. Yeah, this is right. Yeah, and then you had a little bit of a minus. This is right. Wow, that's crazy. Yeah, Yeah, that's that seems accurate, and I believe that. That's crazy. Oh well. Why is this not working? Why is it not working? There we go. You know what this means? Y'all know what this means, right? We're just moments away from the bell. Who's ready? Let's get it. Let's get the dollars today.
He knows how to lay off better than anyone. He knows how to write better than anyone. And I got to tell you, why this stock is where it is. Why not? I mean, all right. Let's take Travelers. Why is Travelers price to earnings ratio higher than Chubb? I don't get it.
I don't care,
right.
Jimbo. I just don't care. I want to see what's going on with GME. GME, it's not halted yet. It's down 18% at the open. It's playing the line, my friends. Playing the line. Right there at the 36.90 line. Let's see what happens. It's a pretty powerful line. Very curious to see which direction we go here. We've got Tesla trying to move green. Enphase trying to find a direction. The Qs. Also, BTC is trying to go down a little bit. Nvidia is trying to go down a little. Come on, GameStop. We've got to pump it up. Look at this. Look at Trade Desk. You're at $96. Sometimes when we're trading, you know, if you don't catch yourself, you could lose sight of your longer term plays. Embraer, for example, $27. It's pretty good. Nvidia now down about 1.6, trying to rise a little. Tesla trying to take off. Let's go. Amazon 26 bips. AMC's down 10%. ARM down 51. Robin the Hood. It's up. It's down a 0.25% here. Supermicro's trying to move up. Hewlett Packard's trying to move. HP Izzle. What about, doesn't look like Salesforce is moving. Tesla, keep it up. You've got to pump it up. There it goes. Oh, can it keep it up? Let's go to the non-average here. There we go. I like the average better. Okay. Oh, there it goes. You're looking for 178.56 is where you're trying to go here. Now, I generally like to let the insanity of the first 15 minutes go before trading. You did just go green on Tesla. Looking for that 178.56. What kind of interaction are we going to get here? Are we going to get a blow past? Or are we coming back down? We're about to find out. GameStop is at $14.91. I think it got halted. Oh, yeah, it did. It was actually halting to the upside again. Wow. And there it goes. Can it do it? Oh, rejected at Kevin's line. I'm sorry I didn't draw the line higher. I apologize. Nvidia, 1190. The Qs. Oh, Enphase. Oh.
Lost the lead.
Oh. Let's go to, shout out to Jung Lee, everybody. Jung Lee says, Meet Kevin as a clown. Have you seen Meet Kevin in a clown costume? It's actually pretty funny. But I think the joke is actually that you're here listening to a clown. What's worse? Being the clown or listening to the clown for stock insights? That's a cute one, Jung Lee. Let's fight. Okay. Tesla wants to push back. No, I just can't do it today. Jeez Lord, come on. What's with the lines, man? All right, Embraer wants to rise. Come on, baby. Come on. Pump it up. DJT 91 bips, boring. Qs are boring. Where's the trade today, friends? Is it a bounce on end phase? Is the trade a 127 bounce on end phase? I'm gonna put that one at the top. I want to see what's going on with end phase. I'm having trouble there on Tesla. Let me look at what time quickly this NYSE halt is up. GameStop halt will be limit up, limit down, pause. Okay, here it is. It is going to be 6:37:28. 28 seconds after. Oh, it keeps trying to push this. Good for you, Tesla. Vertiv is bleeding. The Qs are bleeding. You just bled another 9 basis points. Supermicro has no direction. Salesforce, no direction. I see these big barcodes. I'm not interested here. AM Dizzle is trying to go green. Come on. Give me some news. Give me something. No. Boring. SunPower recovered a little bit. It's down 1.7. It was down more than that in the pre-market. This is Wingstop. It's green again. I hate those losers. I don't know if I've ever made that clear. Faraday Futures. Faraday Futures wants to pump it up. Here is your $293 million market cap? Wait, since when? I thought they were like a fraction of that. That's crazy. I guess they like 10x'd. Yeah. They're like a $10 million or a $20 million company before the euphoria. Okay. Let's see here. Come on. Rivian. Norwegian Cruise Lines. This is boring. Where's the movement today? Tesla. Tesla just broke. Can it hold? Will it hold? Enphase is playing the line. Tesla's got momentum this morning. I don't know how long it'll last, but I'm excited to watch it. Nvidia is going green. The Qs are coming back with a candle. That's good. AMC's coming back. That's bullish for GME. ARM is trying to push. Okay. So it looks like, ooh, and Salesforce wants to bleed. Okay. All right. So it looks like, and HPE gave up. So it looks like this morning, ooh, and Square's dropping. Okay, so we've got Tesla, Enphase, ARM, some movers to watch. Nvidia wants to probably go back to $1,200. So we'll watch these. Yeah, see, that's a tough line. Okay, here we go. You ready? We're about 10 seconds away from GME. Oh. Here we go. It's at -11, -10, -12, -13. Come on. Is it going to get to 43.30? Let's go. Get to 43.30. It's going. It's going in that direction. 43.30 is your next stop. And Tesla confirming the breakout. Woo! Very good. Nvidia 1.4 going back to the downside. ARM. Ooh. Nice. Enphase. Come on, baby. See, this is why, man, the first 15 minutes, I'm like, oh, they're so hard. Let's see here. Yeah. So here's your sideways trend again. Boring. All right, let's listen in over here.
It doesn't work. Really? Yeah, I don't like the screen.
Why not? It's fine.
What?
Because it doesn't respond.
Okay. All right, that's your car.
And it's distracting.
My wife has it.
Is this it? Are we going to talk about, like, nonsense?
It's like a monster. But it's analog. It's not digital. It's pretty good, though.
Guys, on the deal front, I wanted to mention a relatively small deal, but not that small. Power School Holdings.
Are you kidding me?
I'm not kidding you.
Wow.
Yeah.
Okay, just a second. Let's
wait.
go over that.
Yeah, let's go over that. It's an interesting transaction in part because it is a go private. Bain is taking the company private.
Yeah, I don't care. Tesla moving down. Here we go. You can see it right here. Which way is it going to stay? Let's listen in here.
275 to 280, because that would have been telling you economy weak. That's not good for earnings this year and certainly not next year. So I think the fact that if you said to me at the beginning of the Fed's not going to be able to.
Yep, another halt. It's up, it's only down 5.4% right now and gets halted again. And you're now looking at a 0939.12. So your next unlock is going to be 644.12. 644.12. Yeah. Okay. Let's see here. ARM just went negative again. Nvidia's rotating down again. Oh man, I'll tell you, the last week, the market has been a lot harder to trade. It's been rough. Can you explain the hold rules? So they're called lulls, limit up, limit down. And basically, if the spread between what a market maker is available to offer and what the market is trying to price, when that gets too wide, like in other words, there are no sellers and the order book is going to skyrocket a certain percentage, it's a set percentage, then you go for a halt to try to create some more balance in the market. And they do halt in both directions. But you probably just have a lack of people wanting to sell before what's it called? Before Roaring Kitty's live stream. That's my guess. Yeah. So we'll see. Nvidia wants to trend down today. AMC is not instilling confidence. Enfis. Yeah. Okay. AMC just went green. You're at 2%, and that's pretty remarkable. Still bleeding a little bit here. Okay, let's listen back in over here. We've got to bump it up.
But it's time to look beyond that. And you name a few names. You have Amazon, Google there, and then you have CRH. And that caught my eye because that's a building materials supplier, not exactly a big tech company there, Andrew.
Sure. So the overall thesis, the commonality to all those stocks, however, is that if we look from a factor standpoint, what is the best factor year to date? Certainly momentum, but it's also earnings revisions. So in other words, companies that are delivering on earnings fundamentally are doing the best. And that's a very healthy sign of a stock market. You want companies that are, raising guidance to do the best. Well, CRH is an Irish cement company, but they happen to do a very high portion of their business in the United States, which is why they are in the process of relisting their shares in the U.S. And the reason why their business is doing so well is because we have all this infrastructure spending going on. So their business is very strong through fiscal policy spending in the U.S., but the kicker is it is going to be relisted in the United States, and could it get a revaluation upgrade that would be more consistent with basic material companies listed here in the U.S.
AMC halted. Wow.
Actually, earlier this week, we were talking about how you have activist investors really pushing London-listed companies to list in the U.S. for pretty much exactly that reason. But I only have about a minute or so left with you. So really quickly, I do want to point out that you do see a bigger drawdown at some point this summer. What's going to drive that?
Well, if you think about going back to what's worked this year, it's been earnings have been stronger and PEs have lifted. So the very bearish scenario is a whiff of stagflation, because stagflation, means, economy slowing.
Yeah. We know what stagflation is. Blah, blah, blah. What's FFIE doing? I hear some entertainment's going on at FFIE. It is entertaining, that's for sure. Look at that. You're sitting at about up about 35% right now. You are not sure if this is going to keep going. Let's look at GW. Which one was it? This one, G-Wave. G-Wave's down 8%, so tale of two cities right here. GME just opened. Yes, it did. It should have just seconds ago. Oh, it's positive again. Oh, ho, ho. Boom, baby, boom. GME goes, wow. GME goes green after dropping, what, 19% in pre-market following the issuance of 75 million shares and a pre-release of earnings. Wow. That's crazy. Good for GameStop. That's great. And it goes red again. It'll come right back. But watch the lines here. Watch the bounce at 43.30. See if that ends up playing anything here. 43.30, watching that. Enphase can't go anywhere. Nvidia wants to move. Faraday Futures wants to move. Tesla's trying, but it's getting stuck in molasses. What is that trash? It does look like you've got the Qs trying to move here. GameStop back down about 4%, going right back to the lines. Let's see if it can hold. Can it hold? Can it hold? Let's listen in. Oh, I do want to check Hood really quick. I know that one's been a mover. The more you get the this momentum movement going, the more you get these breakouts on Hood. Just be careful. Yesterday was in a trading day range between these two purple lines. And when you get in a trading range, it's tough. It is really going to be tough to kind of pull trades in that. Let's listen in over here.
The way it is. I mean, you could write the script about how disappointed everybody is.
Although that's what's different about this year's conference, we think, is they usually don't use it to talk about the phones.
No, they don't. And I think that they want people to. This is an opportunity to talk about all the businesses that have been created. And we need, like, if you, like, let's say Benioff's here. And you say, what about the CEO of Salesforce?
Yes.
What do you think of the Vision Pro? And he'll say, well, there's not enough people writing for it yet. But let's see what happens at the developers conference. Let's see how many people are writing for it. They want to know. I mean, by the way, when you talk to Jensen Huang, he says, look, the reason why we're doing well is that everybody's writing for us. It's this amorphous group of very smart people who either write for Apple or they write for Samsung. They write for Jensen or they write for AMD. The winner takes everything. That's
write
the way it
code,
works.
is what you're
They write
talking
code, yeah. Even though we know it's codeless.
Will soon be replaced by generative AI.
Well, don't worry. You can take the Eli Lilly drug and live forever and actually have cognitive sense. Eli Lilly has a new drug, David, just in case you thought it was old GLP-1.
For Alzheimer's.
Monday, it's going to be.
Monday, we're going to get the data. Is that correct?
The efficacy is fine. The FDA has already said for limit. Don't believe that when it says narrow. Don't believe that. Because once it's approved, the country's going to fight for this drug. You're going to want this drug. The stuff, the numbers are good.
Really?
Numbers are
giving us a heads
numbers
up, or
are
we
really
already
good.
know what the numbers are?
Yeah, we do. The numbers are really good. You're going to want to be on this if you have anybody in your family
who has a history of Alzheimer's?
Yeah, you don't want.
Okay.
You don't want to take this.
That has been one of the very, very difficult things to solve in science for the last 25 years. Given the potential market for it, you might imagine a lot of companies spend a lot of time trying to do it.
David Ricks is remarkable. David's
Oh,
guys, we're going to see
GME halted again to the downside this time. What a mess. Tesla's red now too.
S&P down just a handful of points. Watch bonds today as well. 10-year
Faraday futures.
442 is not near the 4.5 that we had on Friday. We will get inventories in a few minutes, and then Lisa Cook at noon. Stay with us.
Inventories. Let's see, I didn't know we were getting data. I thought we already finished the data. Oh, okay. Well, wholesale trade sales month over month and wholesale inventories. That's 12 minutes. Big deal. That's not a big deal. Bigger deal is GME being halted again. What is it, like the third or fourth time? Crazy. Did meet Kevin clarify full-time versus part-timers? We just fact-checked the numbers. And yeah, I just fact-checked the Twitter post against what the BLS said. And yeah, it does appear to be true that there are a lot of part-time ads with full-time losses. So yeah. Let's pump it up. That's probably what the people at the BLS are saying. We've got to pump it up. Ay. All right. So, honestly, the only thing that I see really trending up right now, you've got Hood that's trying, but it's got a consolidation range. You've got GME that failed its breakout here. Faraday failed. Nvidia is trading sideways. ARM is the only thing that's been trending up. This could U-turn very quickly. Nobody knows, but that's what I've been watching. I've seen Enphase try to move. It got stuck. Tesla got stuck. Everything's getting a little stuck in the mud. So I am noticing that. I don't know how long that ARM trade will keep going. Although the Qs are trending up. So you could be setting up for some kind of market that wants to go green here. It's just very, very slow trading range here. You've got AMD that's also trending up. So I'm going to put them at the top here. So I'm going to put ARM at the top because this one's moving really nicely. And then, yeah, there goes more. Now it's being a little more violent. ARM and AMD, these are the ones that I'm seeing moving right now. Otherwise, this is boring. Like, I honestly, like, it's just the perfect way to get reamed is like, when these suckers trade sideways. Okay, Celsius, less aggressive to the upside, but you've got some moves here as well. And Hood's trying to come along for the ride as well, it looks like now. So let's keep an eye on that. All right, let's jump in over here for a moment.
3%, Ed.
I know that you caught my column the other day, but the basic premise of it is if you look at the third-party data, overall the smartphone market's going to recover this year and have around 4% growth across smartphones.
Yeah, so my top four I'm watching right now, Celsius, AMD, ARM is at the top of the list, and Hood. But all four of those are ones I'm watching for upward momentum right now. ARM keeps going right now. It's at 2.5% right now. I wonder if we can get to 3%. It's 2.6 now.
Longer, higher price point, they're fine. So it's a really big question in Apple's case in particular, because what Mark's reporting tells us is that these new AI tools, you have to have iPhone 15 generation or later, so whatever the devices they release later this year, in order to get access to the AI tools and AI suite. Will that spur an upgrade cycle? There are those that think they will, and there are those that think that it won't, because consumers can be price sensitive, and they basically look at the AI tools, and there's a large body of consumers out there that say, I don't yet understand how I'm supposed to use generative AI on my phone every day in a way that profoundly changes my life.
Ed, before you sail away, just really quickly, we should talk about Nvidia and, of course, that upcoming stock split. Right now, Nvidia shares will cost you close to $1,200. After they split the stock, will that really invite retail in?
It really will, and a stock split simply works this way. Fantastic explanation in the quick take. It's like swapping a $10 bill for 10 singles. You know, it lowers the barrier to entry, and there is intense retail interest in this name. Go on social media and search for Nvidia and see what's being talked about. Look on Reddit, look on StockTwits. It's just been an astonishing run, and it does not have a dilutory effect. So let's see how it goes. Look at comparisons. Tesla did a stock split. How did that go for Tesla? It went pretty well in terms of the immediate upward trend in the days and months that followed. So definitely one that you guys can be watching for next week.
Ed, we will certainly miss you next week. Have a great vacation. Our thanks, of course, to Ed Ludlow in San Francisco. And for some of the sector price action this morning, let's get to Bloomberg's Simone Foxman.
Yeah, Katie, a narrow majority of sectors are in the red today when we look across the S&P 500. Of course, real estate taking the most hit after that strong jobs data and the prospect, of course, of higher for longer rates. But when we look back over what the past week has been, we're looking at an S&P that is likely to see its sixth out of the last 7 week of gains, and that's mainly on the back of what's happened in info technology. Hewlett-Packard and Nvidia leading here, but that's also had 6 of its past 7 weeks in the green. Communication services, as well as
GameStop's now down 13%.
Cruise lines and Carnival, but comm services there are second best performer. To the downside, you see energy and utilities there, but when you look down into the details of utilities, it's really all about what's happening in the energy space. We saw OPEC Plus announce that it was going to gradually wind down production cuts from October. We saw Brent fall below $80 a barrel, hitting a 4-month low on Monday. That's where the real negativity is in this market, Katie.
All right, Simone Foxman, thank you so much. Coming up, the market-moving events you need to be watching. That's next in our trading diary. This is Bloomberg.
I just tweeted, and it's gone on GME. Maybe the 3 halts did it in. Yeah, I mean, it's crazy. I just wonder, like, how ridiculous the stocks would move if it weren't for those sort of halts. But anyway, the 4 momentum movers I got right now, all of them just edged a little lower. Like Celsius just edged a little lower too. Celsius, AMD, ARM, Hood. I'm gonna be watching these really closely as my momentum movers today. I want to add Tesla to that list, but let me tell you something. This last week, Tesla has been range bound almost every day. It's been a giant pisser. It's been a really, really hard stock to play options on because it just stays range bound. AMD getting a little bit of a red candlestick right now. Normal to see that momentum last for maybe about 10, 15, 20 minutes. Sometimes you'll get momentum lasting for an hour. You get a little bit of a pausey doozles, and come right back. So I'm going to be watching all 4 of these today. End phase, sideways consolidation, I ain't touching it. I've made lots of money in my trading time. I've lost lots of money in my trading time. Fortunately, I'm well up on trading. But one of the biggest ways I have lost, and hopefully in the future don't again, but I'm sure it could happen again. One of the biggest ways I lose money is holding puts or calls in a consolidation, praying for a reversal. Don't do that. Consolidate, like these, when you see this sort of barcoding, you know, where you're going to go with your little laser and you go, burp, loser. Stay away. Stay away. So, anyway, Celsius rotating down. AMD keeps going. AMD is looking good. ARM has potential. Oh, Nvidia. Nvidia could be driving the moves today. So watching Nvidia, be careful also. I highly encourage you be careful of 0-day options. So if you are options trading today, just be careful. It's Friday. It's another great day to get absolutely reamed if you are if you're trying to play the fluctuations on the day. The dollar hollas can go substantially in one direction or the other. Let's just say. I know. Robin of the Hood wants to keep on moving. Let's see if it can sustain this breakout here. Yesterday, it didn't. 1, 2, 3 fails. 3 fails yesterday of this level. So I'm going to watch that. All right. Let's see what else we got. We have data. Data coming out in 3 minutes. Somebody here says, sign me up for the reaming. Well, you want to join the reamage, make sure to check out the Stocks and Psychology of Money group, where you're guaranteed to get your reamage. Is that a word? Reamage? I'm going to look it up. Wait. I'm going to use a private browser. Reamage. The number of reams in a lot of paper. Stop. Are you serious? Oh, what kind of tonnage you carrying, sir? Reamage. You want to check it out? You want to see my reamage? Oh, you gotta be kidding me. It's like cargo. Wait, isn't it that, what is it? You put shipments on a truck, but you put cargo on a ship? Is that right? Party. I love losing money with Kevin. Let's go! Join all of us. The reamage is already here. Girl power level 9,000. Estrogen levels at all-time highs. Stop it. Oh, man. Oh, dear. All right. Oh, come on, AMD, you little weenie baby. What is this trash? Yeah, all of them. Come on, man. Pick it up. Step it up. Okay, let me see when the trading halt ends. Oh, at 59 seconds. The trading halt ends 1 second before data. 1 second before data. 1 second. All right, you ready for this? Inventories are expected to come in at 0.2. Inventory buildups generally, I recently have been coming in low, mostly because you've been, really you want to, like, you don't need to build up inventories right now. You could just buy it. Anyway, so here we go. Wholesale inventories and the GameStop unlock at the same time. Ready? Wholesale inventories 0.1, a little lower than expected, not a surprise. And GameStop continues to go down on its 4th halt. All the momentum is driving up. Everything is driving up. Okay, look, Tesla's now moving down. Nvidia's now moving down. Enphase is now moving down. Faraday Future, are you freaking kidding me? Faraday Future's still going. Okay, Faraday Futures takes the lead as the winning mover right here. Faraday Futures moving up. GameStop's trying to U-turn. Celsius stabilizing. AMD stabilizing. I wonder if we're going to get a bounce over here on VWAP. I think there's some interest in AMD, but it's all going to be predicated on how, really, frankly, Nvidia moves. Stabilizing on ARM, stabilizing on Hood. Nvidia, Tesla's given up. This is why I've just been very cautious about getting into Tesla on trades lately. Amazon, okay? Amazon rallied yesterday into the close. That was an interesting one. Don't the Fed speak next week? Yes, they do. Actually, world leaders pulling back, begun de-dollarization. Constant law. Okay, you guys are debating politics. I ain't gonna get into that. Who can read that in 1 second? Algorithms. Algos, baby. Yeah, algos sound hard, but you could go to like an IBKR and set up a trading algo. I don't know if Coinbase does, but what I do know is you could check out the paid promotion at metkevin.com/Coinbase and get up to $200 when you sign up for an account. Check them out, metkevin.com/Coinbase. By the way, we are officially today 2 weeks away from the start of this 3-day event that I'm holding in Vegas. I'm purposely trying to keep it a little on the smaller side. I think we have maybe like 20 seats or something like that left. Reason for that is a big event takes way too much coordination, whereas what I'm wanting to do is, this is sort of like, the way I look at it is, this is the best value, highest amount of content, insight, and value you can get, and the first time we're trying to scale up a larger event. So I think everybody who's coming is going to be in for a really big treat. I'm really excited about it. So feel free to check that out over at meetkevin.com. All right, so AMDizzle going right back for the run. AMD's going back for the run. ARM's going back for the run. All right, take two, baby. Let's go. Take two. The data's out. It's almost like you had a cooling for the data. You know, you had to wait for the data to come in, and everybody's happy again. See, the Qs are moving up. Okay, all right, all right.
Across the middle, where they think it'd be sustainable. So they would still have some inflation worries, and that's why people are pricing out extra rate cuts right now. Under the hood, there are a number of reasons why this is an interesting report that a lot of people are going to be looking at. The seasonal adjustment factor for jobs was fairly large, as it usually is in May. 681,000 difference between the non-seasonally adjusted and seasonally adjusted numbers. The average hour earnings I mentioned, the prime age participation rate, the highest since 2002. We did see a decline in the overall participation rate because teenagers left the labor market while they were getting ready to get summer jobs. And the household numbers versus the establishment numbers, that's going to have some people talking the big difference there. But overall, a strong report. Overall, basically, Katie, until next Wednesday when we get CPI, the onus is going to be on the Fed to maybe start thinking about when it or even if it wants to cut.
Yeah, the fun continues, like you said, next week. A CPI report and a Fed decision. We are very lucky. Bloomberg's Mike McKee. Have a great weekend. And let's broaden out this conversation now because joining us is Drew Pettit. He is director at Citi Research. Great to see you in person.
Yeah, thanks for having me in.
I want to talk about this stock market and the resilience that we're seeing. I mean, you take a look at futures. They obviously dropped after we got those numbers at 8:30. Now we're
just sent another little alerty doodla there to everybody in the stocks and psych group. Little heads up. I always like to give a little heads up.
What's going on in the economy does not matter for the stock market.
And I actually agree with you there. To some extent, it almost doesn't even matter for fundamentals. If we go back to the 70s, GDP and earnings growth really highly correlated. Fast forward to today, that's dropped substantially. So when we think about the market, there's actually two components. There's the cyclical side, which today's report and all the economic data feeds into. And then there's the structural side. And
blah, blah, blah. All right, look at this. GME, halted again. Faraday Futures tops out a little bit. You did have a topping out on Celsius, AMD, ARM, Hood, and some of these other plays when the data came. But you are now having a recovery. AMD recovering. ARM, I suspect, will. It started to recover after the data. And Robinhood keeps running as well. Part of that is possibly driven by this consolidation up on Nvidia. In addition to consolidation up on Nvidia, you are getting Tesla that's trying to push back to where it was. And so those are where the lines are. So I'm very cognizant of Tesla's move here. You've got data out of the way. Let me look at the econ calendar. We've got data out of the way for the rest of the day today. Remember, if you're playing calls or puts or whatever you're doing, I just caution against the Fridays, the 0 days. You could always go a week out is something to think about, or 2 weeks out or 3 weeks out, whatever, right? Sometimes if you look at the ones that have the little W on them, the weeklies, those are going to be a little bit more thinly traded, but not always. So it depends. So you can compare open interest on some of these various different positions. So Robinhood, a little bit of a red candle here on Robinhood. Let's kind of see how this continues to move. Not uncommon to get a lot of fluctuations on the minute candles. I generally like to look for 5-minute trends when I trade, and but I'll do that with the 1-minute candles. So I'll look for like 5 minutes in a row almost. You've got the Qs are potentially going to go green here. So I'm very interested to see this. I think Kevin believes the package was a contractual agreement between the board and Elon proved he deserved. I didn't say that, but I believe Elon hates culture, political war on us human as citizens, and has harmed Tesla EV sales more than his pay package. Oh yeah, well there's no doubt about that. Yeah, I haven't really made the most clear position on where I particularly stand on the pay package, mostly because I want people to make up their own decision. So I have made a clear position on. Well, I haven't made it clear. I've clearly covered the judge's ruling on the decision and some of the details post that ruling. And so you can kind of go through those videos if you want. You can see it directly yourself and just see what the allegations are on each side, right? Okay, lack of momentum here on Faraday Futures. Celsius got green barred, then red barred. A little bit of green and red there on AMD. I think a big moment here for AMD is going to be that 170 number. I think there's a good shot we're going to keep pushing 170 today, but I'm not sure, obviously. You've got Nvidia continuing to trend up. You've got Enphase looking at a sideways. You've got Tesla sideways. I don't like the consolidations. Not ideal. Bitcoin bouncing on the yellow 71.2 line. I've got Q's continuing to try to trend up here. Amazon keeps pushing. So I'm going to put that one at the top now too as the momentum movers I'm seeing today. GameStop right back to its 36 line. And let's see here. Let's see. Okay, let's go to the downside. I want to flip around here for a moment. Barnes & Noble down 33, GameStop 17, Greenwave down, Enphase still stuck around 2.5% down, Palantir's down 2.5% down. Nvidia keeps climbing, which makes me bullish on, but it's slow, very, very slow climb. Makes me want to be somewhat optimistic on the chip sector today, but who knows? It's a little consolidating though on Nvidia and the Qs. And then Celsius now consolidating a little bit. ARM, Hood, still got the uptrend. I think AMD's got. Let's see if it gets caught by VWAP again. That was a close catch, not a perfect catch here. Let's see if this is an entry point or not. Based on what it does here with VWAP, looks like it might be trying to create a bottom right here. We'll see. And no more halts, at least for the time being over here. So let's watch. Yeah, we'll cover the key live stream. Let's listen in back over here.
6,200 is a very, very bullish case for us.
Right.
This basically means we're going to get the high end of structural tailwinds from a growth perspective for the next 5 years. We're talking, low teens growth in earnings for 5 consecutive years. That's a pretty high bar. But coupled with that, you're going to need a 10-year that falls sub 4% and probably the Fed to cut at the front end.
Well, what gets the 10-year sub 4%? Because that sounds almost like a recession to me, almost.
It can be, but here's the thing. If we have a lot of productivity gains and that's what drives inflation down to more normal levels, you can see Fed cuts. Really, that's the ultimate soft landing scenario. I think more fair value for that structural trends, if we're not going to have massive cuts, is 5,500. So you could buy some pullbacks in that scenario. And again, the market doesn't really scare us because the fundamental trends are intact, and that's really what drives equities long term.
Okay, buddy. All right, so look at this. I thought Amazon was on an uptrend. Wrong. At least it started. I mean, you could still call it an uptrend, but it's certainly rotated down here for a minute. AMD just broke VWAP, which is not great. So I'm going to keep an eye on this and see if there's a low entry here, if it's the moving average or what. So we're going to watch AMD's. The next support level that you have for AMD is the 164.46 line. We've been here for a while on the day chart. 164 though is, quite a bit low on the day. It's right here. It's close to where we were in pre-market. We basically bounced there in pre-market. So I'm going to watch this. This is AMD. I've also got, I'm going to keep, what charts do I want to keep up today? So I'm going to keep AMD up. I'm going to keep Tesla up. BTC's right. I'm going to move BT. I'm going to change that to, I'm going to go GME. I have a second computer here that I like to throw 4 charts up on, as well as some news. So throw that up. So I've got Tesla, AMD, GME. I'm going to go ARM as well. I'm going to look for reversals on both of those today. And beginning of the day I know can be volatile. And okay, cool. All right. Quick news. And okay, really? Come on, give me some news. Whatever. All right, let's listen to the CNBC for a moment and let's see what we got. Oh, there we go. News monitor. Perfect. Skip the tour. I don't want your tour. All right, what do we got over here?
You mentioned, of course, enormous deficits that might be brought on by continuing the tax cuts of 2017. But I wonder, your administration has spent an enormous amount beyond what revenues are coming in. How concerned are you about the interest costs in general, given rates perhaps will stay high because the economy remains strong?
So we absolutely need to bring our fiscal picture into a more sustainable path. That is the president's priority. He signed into law $1 trillion in cuts already and has a budget that would reduce the deficit by $3 trillion over the next 10 years. And he's always put on the table very transparently how he would pay for protecting Social Security for our seniors. Those are promises that we made to our seniors. They paid into their...
Boring. Amazon's trying to stabilize. Faraday Future's trying to stabilize. GameStop's trying to stabilize. Celsius can't find its bottom yet. ARM, that might be creating a bottom right there. I'm sorry, not ARM, that's AMD. Although ARM is trading a potential bottom there as well. Hood keeps going. Gotta give it to him. Hood just keeps going. So, a good job on Hood. Now, that uptrend has been going now for coming up on 45 minutes. How long is it going to last on the Hood? I don't know. Tesla, still barcoding, still trading sideways. So, out of these, AMD, it looks like it wants to make a bottom at 16731. Hard to tell right now if it'll hold that. We'll watch that for a moment. GME wants to bounce off this line. This is where it bounced yesterday, too. So watch that. Let's see here. Nvidia, very, very slow slog up. Embraer moves up. Nice. Qs are still at 10 bips. Getting into that sideways kind of trading market again. Yeah, and then get a little red candle there at this. Okay, what is this? Let's see here. Tesla seems to be pinned at 177.5. Vlad, flawless victory. Well, yeah. What's this? It's the SpongeBob song. Sweet, sweet victory. Yeah. SpongeBob. Let's see here. Let's see. Somebody wants to know why you mean for determining whether there's a recession or not? Like the National Economic Council? Because you could also be talking about necrotizing what's it called? There's a phrase for it. It's like NEC, necrotizing enterocolitis. Necrotizing endocolitis. That's bad. Oopsies. All right. So, come on, baby. What else is going on here? Let's see it. What do they got? That's an ad. That's boring. It's highly boring. Okay. So, then you've got... let's see here. Celsius. Celsius trying to form a bottom. Oh, here's your moving average. There's your moving average bounce on AMD. It's unclear if it'll actually hold there, given that obviously it's a it's going to be a what's it called? You probably need more of a confirmation than a 1-minute candlestick. GameStop struggling. Hood's coming down now too. Man, look at this mess. Can't keep any of them up today. Tesla can't keep it up. The Qs are going sideways. How boring today. What's going on over here? Do you plan to watch Deutschland perform at the European? Ooh, that sounds like it'd be really fun. What's Lulu doing? Let's see, Lulu. Oh, Qs are moving up right now. And let me check Lulu. Lululemon. Yeah, 59 bips. There goes Amazon again. I was trying to push. Yeah, some of these early morning movers just gave up a little bit. Hood, let's see if it can stabilize. Let's go back to CNBC for a moment.
YouTube live stream appearance in roughly 3 years for noon Eastern time today. Immediately, that kicked off speculation that he would talk about his reported massive stake in the video game retailer. Now, a stake that has not been independently verified by CNBC. But the live stream announcement itself and subsequent 45% gain in the stock yesterday was then followed up with screenshots from Gil showing a stock and options position in GME that totaled at the time more than $500 million in market value at then prices. You fast forward to this morning when GameStop itself surprised the meme stock world by early releasing its quarterly report. It was supposed to come out later on next week. It showed that narrower than expected loss, but worse than expected revenues. That regulatory filing that showed the intent to sell up to 75 million shares of stock, that is what really kind of fueled the losses that we saw in the pre-market, kind of down sharply lower, as you can see there. We're now down 21% of the session. It was most likely, again, driven by the stock sale plan as opposed to the actual fundamentals. So it looks like GameStop itself got a lot of their ducks in a row to take advantage of the Roaring Kitty live stream today. They got out all of their relevant financials into the public sphere, as well as their intention to sell stock into the recent rally, all ahead of the show at noon today. And by the way, if you want to talk about how much activity has been generated here, you take a look at just the moves that we've seen volatility-wise. You couple that with the volume, Carl, Sarah, David, that you guys have been talking about. That is why that GameStop construct has been such a sight to behold over the course of the last couple of months here. So I don't know, guys. It's going to be... We're going to be prepared to watch it at noon Eastern time. I'm not sure what to expect, but we hope it'll be...
It's going to be really entertaining. It's going to be... I don't know what it is. Watch, it's like... It's him and, like, Ken G. He's gun to his head. I don't know. It's going to be freaking crazy. So, anyway... this is almost a perfect moving average bounce here on AMD. At the same time, you have Amazon's about to go positive. You have Hood slowed its ascent. AMD now rising. And ARM's moving on up. GME's losing 36, 94. Not good. Not good. Lulu keeps rising. Nvidia sideways. Tesla sideways. And this seems like mostly sideways. I don't know if we see any other moves here. I mean, we saw the moving average bounce there on AMD. I don't know if it'll hold. Looking now for, let's see here, market blah. Let's see here. Small cap underperformance extends to 20-year low. Higher yields back, stronger growth message from payroll. Sure, whatever. What did we get in terms of yields this morning? Now we're at bonds of 13.5 on the 10-year. Okay. And Apple faces pressure to show off AI on Monday. Yep. This is not a surprise at all. And yeah. Okay. Anything else over here?
What's going to happen there? We just don't know if it's going to be GameStop itself, but I think all indications are if it's not about GameStop, there's going to be a deep sense of disappointment on Wall Street.
Oh, yeah. Okay, thanks, Tom.
Sure.
We'll watch it. As we head to break, here's our roadmap for the rest of the hour. What the hot jobs report means for this record-breaking stock market and how to position your portfolio from here.
Plus, Bitcoin is trading back above 70,000. We're going to tell you how options traders are betting on that crypto right now.
And don't forget, football, basketball, and soccer. There's a new red-hot sport that billionaires and private equity are getting into. We'll tell you about it as Squawk on the Street continues after this.
So I'm going to schedule the Roaring Kitty live. It's supposed to be at 9 California time. I'll probably go live at 8:30, something like that. So I think that'll be reasonable. So feel free to join. It'll probably be on this channel. Yeah, it's going to be on this channel. What I'm going to do is I'm going to create a live stream so you can set a reminder for it if you want. I'll add my commentary to what's going on, which I think will be entertaining. Oh, really? Why is that not working? Anyway, I'll get that fixed. So I'll get that scheduled, I should say. So after that, we have some catalysts to pay attention to. The catalysts we want to pay attention to are, hold on, let's see, Roaring Kitty, Deep, effing, Value, GME, GameStop, live stream. All right, perfect. So I'm setting that for 8:30. Yeah, okay, cool. So that's set. All right, cool. And then what I'm going to do is I'll redirect us from here to there. But anyway, so I'll be on Twitch and Twitter and on YouTube, and I'll just add my commentary to whatever is going on. As far as, let's see here. What else? As far as catalysts, that's what we should cover next. So catalysts coming up, we are looking at... okay, so the next catalyst is really, I mean, one-year inflation expectations on the 10th. I think that's Monday. Then on Tuesday, you have small business optimism. That's boring. And then you have the Fed and CPI both coming up on the same day. That's going to be crazy. And that's next Wednesday. So I'll cover that very closely. And let's go in over here for a moment. So we'll cover that. Then we're looking at... Okay, these are all gone commercial right now. Okay, what else is going on? So we'll cover those obviously next Wednesday, and then we'll also cover the Roaring Kitty live today. So stay tuned for that. Okay, good. So what else do we have? Lulu rising nicely. Good little jump here on Lulu. Nvidia slightly rotated down a little bit. Right now you're sitting at about 1187. Then you've got a little bit of a bounce on Enphase here. A little bit of a bounce up on Tesla. Nominal bounces though. Embraer keeps moving up. You're at about 1%. Bitcoin's up. Qs are up. Supermicro is up 27. Palantir's moved. Okay, very good. What else do you have here? Lululemon. Lulu's moving nicely right now. Very good. And then AMD. AMD's stuck at that moving average. So you're going to want to see if you're going to end up getting... I mean, this is now a bounce, like a confirmation bounce on the moving average. And it looks like Robinhood wants to move right here. This looks like it's a... move off of about the 23 level, if I see this correctly. 2305-ish is where you're getting a little bit of a move here on Robinhood. So we'll watch that. Then let's see here. What else? So we cover Catalyst. We got Roaring Kitty coming up. The course member live stream coming up after I make some coffee. Let's listen in here briefly, just see if there's any other last-minute news or commentary. What does JPM say about jobs?
What are the market survey saying? What are the challenger layoffs saying? And you put all this together, and what it tells you is you've got an economy that's in soft landing mode. It's been in soft landing mode really for 2 years now. It's cooling, but it's cooling very slowly here, and that's okay. It's great for Main Street, but it's no reason for the Fed to cut right now.
The journal also points to what they're calling sort of asymmetry, meaning weak job numbers might pull forward a cut, but strong ones don't necessarily delay it as much. You agree?
I think that's right, because if what the Fed has said is if we see noticeable weakness in the labor market, they may move faster, and clearly that's not there. But I think they've still promised that they don't have to see a recession, or even the threat of recession to bring rates down to more normal levels. They just have to see some confidence on inflation. So we've got strong job growth. So long as inflation is gradually easing, I still think we get at least one rate cut this year.
So is it a market-friendly report or not? We're Dow and
Tesla's starting to try to get back to its line right here.
the S&P is recovering.
Well, I think it is, because it's not particularly friendly for the bond market. But if you think about the stock market, the calmer the economy is, for as long as it's calm, it just is a great breeding ground for bubbles and exuberance. Money needs to go somewhere. And is everything okay in the economy? Yeah, everything's okay in the economy. So you make one more bet. And I think that's been going on for a long time here. This slow, soft landing is causing people to gradually add money to the market. I think that's what's putting the market higher.
Although we do have some regional banks on credit watch today out of Moody's, and the longer we extend this window, the higher the chance of an accident. What do you make of that?
And there are plenty of areas in private credit and private equity which are eventually going to get hurt by these higher rates. So I think there are potholes out there, but at the moment we can't see anything that is going to be so big as to actually derail the economy. We don't have anything that looks like a pre-2008 situation at all. So yes, we're going to get some pockets of bad news along the way, but it doesn't look like it's going to be that important from a macroeconomic perspective.
We'll see what CPI gives us in the days to come, David. Thanks. David Kelly.
As we had to break, check out the biggest gainers on the...
Who halted? Hold on. Oh, GME halt again. Right as it starts going up, too. Come on. Come on. What is this? Okay, let's see here. Let's get that in. Okay. That's interesting. So give it about 5 minutes for GME to come back. We'll watch it when it reopens.
Iconic brands speak for themselves.
Okay. Let's try this.
And boost circulation.
Everything's on
without
commercial
physical
right now. That's fine. We don't need them. We don't need them anyway. We don't need them at all. So, okay, good. So, next thing that we've got is Amazon, rather, is starting to move up a little bit here. Amazon pumping. Come on, baby. Come on, pump it up. Let's go. We got to pump it up. And Faraday Futures. AMD stuck at that moving average. Robinhood's trying to come back. Nvidia's consolidating. Tesla, come on, baby. Give us a breakout, would you? Embraer, 169. Embraer keeps moving. Good for them. And then you've got Salesforce. Actually has an uptrend today. Whereas HPE doesn't. Snowflake also does a little bit. Coin, Apple's rotating down. Feels quite mixed today, I have to say. Quite mixed. Ubiquity, Amazon. Yeah, and then you got the halt over here on GME. Okay. So, let's see what else is going on. ARM. A little bit of a recovery there on ARM. But nothing violent. Yeah, very, very slow movements here. Nothing extreme or violent. Okay, there goes Hood. Trying to pump it up. Nvidia. Enphase is almost down 3. Oh, Enphase is down over 3%. Somebody says SMC. Tesla gets rejected again. Somebody says SMCI puts looking good right now. Ooh, trying to catch that downtrend. Yeah, it's just been a lot of sideways. Ooh, look at JPM. You're right. That is an interesting move there on JPM. Let me see what time the GME halt is up. GME halt will be up in about 1 minute from right now. So let's go to GameStop. And let's go see what we have here. Okay, we got about 50 seconds to go. And okay, 1 sec. Let me just send a note. Okay, there we go. And then we have, yeah, it's just Amazon keeps trending up. Then we have, I'm going to watch GME on the halt. Where is it? Here it is. GME, let's go, let's go. Let's see it. You got about 10 seconds to go on this. 10 seconds. 10, 9, 8. That should be like right about now, honestly. There it is. Negative 20, negative 19. Almost going to negative 21, it looks like. It's stuck at 20 and a half. No. Oh, negative 22. Oh. Just the volatility here. All the volatility today is on GME, it seems. I mean, it kind of makes sense. So, pretty remarkable movements here. And it's also tough to play when there are all these halts. Like, how do you trade it when it's halt and halt and halt and halt and halt? It's crazy. You know, because you know, if you're holding an option, you're holding a stock position, you want to be able to move on the lines. But then you get a halt and you get these gap ups and downs. You know, you could get screwed pretty quickly. So it's a tough one to trade. And the volatility is so high, the options premium is just through the roof. Okay, Lulu just gave up. You've got Amazon slowly trending up. AMD trending up. ARM trending up. Hood's trending up. Tesla. Come on, baby. No. Okay, Tesla. Q's slow trend up. Well. Anyway. Alright. I think it's going to be time. I'm going to do a quick check. See if there's any news. And let's see here. We've got No news. Nah, there's not really crazy new news. So let's go ahead and push the button for now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers, house hack, nor am I presently acting as a market maker. This is crazy. Everything is trending down. It's crazy. I mean, look at it. So obviously GME is trending down, but then you had a breakout on JPM. That's trending down. Supermicro started trending down. Lulu was breaking out. Starts trending down. Amazon's the slow slogger up. That's the only one here. AMD is now consolidating around the moving average. You've got Hood, you've got ARM, Greenwave. Nvidia is trying to move up. Enphase is now down 3.5. Tesla can't get a move on. This is tough. Except the Qs are moving up. All right, folks, there we have it. Thank you so very much for being here, folks, and we'll see you in the next one. I'm going to make some coffee now.